The British pound saw some early gains this morning, early before U.S. traders came in. But lo and behold, the dollar bids and things start to fall apart, ending what was a nice little rally, falling just short of 128, which would have been a big, if we could have gotten just above that, that would have been a key breakthrough level. But we failed for the second time in about a week. And it seems to me that that's going to be a difficult level to breach without some kind of catalyst event, some kind of moment that pushes the pound north of that. It's been a real struggle for the pound going back to early May, and I think at this point upticks, while we may have seen a little bit of short covering, short covering there on this recent rally, a lot of it can be attributed to the weakness in the dollar, which has certainly seen better days as well, given that you now have a Federal Reserve looking to cut rates, and certainly that has been really what has been front and center on currencies, on the currency map and on currency radars. So right now we failed to hit that 128 in the pound. Everything's backed off a little bit. It's certainly not turning uber bearish yet, but we're just above that key low we hit just recently, about 5 or 7 sessions ago, the 125.06. Recall it's the second lowest we've had all year. You got to go all the way back to January, the last time we traded lower than that. So obviously the pound really has seen better days, even amongst this uptick. And if you look at what the Bank of England is doing, they did nothing to their rates. There was, I think, some hope there that you could see a modest switch in tone. They were looking to possibly raise rates in the second half of this year, like many central banks were earlier in 2019. And lo and behold, there's too much going on right now with the global growth concerns, with the U.S. and trade, and lo and behold, that Brexit thing that just won't go away. That continues to be a thorn in the BOE's side. Yeah, they're going to probably keep rates on hold at least until fourth quarter, if not beyond that. If you look at what's happening in the U.S., rate cut expectations are going through the roof. So I doubt we're going to see any kind of tightening coming from the BOE. That would be certainly something out of left field. So right now we're seeing, obviously, policy being more dovish. We see the fail to really break out of the downturn that we saw since early May. And I think it stems back to one thing, Brexit. I mean, remember when Brexit, the line in the sand was March 29th? It seems like years ago. Yeah, it was only about 3 months ago, and now they're looking at October 31st. So that's the day we're going to now hang our hats on. Will the politics, will the economics all work themselves out by then? Hopefully. And I think that's what we've been saying all along, is hopefully this will work out. And that's not really something to hang a trade on. And there's certainly not a lot of confidence there. So as you can see, that sell-off in the pound that we've seen, not only against the dollar, but also against the euro currency. The pound euro cross has been getting beaten up as well near its year-to-date lows. So I think at this point, the pound needs some kind of resolution and clarity. Whether or not it sets a good tone or a negative tone, it needs to move on from this whole Brexit thing. Are they going to separate or are they not? And can we get on with it? And I think the market has become very tired. I think that's why you're seeing the very negative bearish tone in the pound, despite the fact that, yes, we have seen the dollar get hit pretty aggressively as well, but we haven't seen that adverse reaction in the pound. So I think it could be a long few months here for pound traders. It could be a very long few months for Bank of England governors, because at this point, they really can't do anything until they get their own house in order. So right now, the pound, with a modest uptick over the last several sessions, starting to see some cracks in the dam again. That 125.06 level may seem far away, but it could be pretty close if things continue the way they have been since early May.